no problem.
We'll go on Facebook. Hello, everybody. If you're joining us, you're very welcome. We're just going to see if Zuck allows us in. Oh, something's gone wrong. Typical. The one time I do not get my tech team to join us because they wanted to leave early this evening. Well, not early because it is past the hour, but let's try that again. Come on, Facebook, Zuck, please help us. Something went wrong. Go back. Ah, well, we're just going to have to post it later, Mary, I think. Not to worry. Will I give it one more go, will we? Will we try one more go? Here we go. Live on Facebook. No, it won't let me. All right. Not to worry. I don't know what's gone wrong. Listen, we'll post it. We'll post recording up instead, Mary.
Okay.
So listen, you're very welcome, everybody. I'm delighted to be joined by the wonderful Mary Fisk-Taylor. She is an expert in a lot of things, and she introduced me to Profit First. So even though in our business we practiced the principles for many, many years, when she introduced me to Profit First, I read it and I went, oh my gosh, I love that. I absolutely love it. And we'll talk a little bit more about that a little bit later. But Mary, tell us a little bit about Profit First. Who's behind it, what it's about, and the culture.
Yeah. Okay. Well, good question. Well, so our great friend, Mike Michalowicz, and if you don't follow Mike Michalowicz, look him up. He's doing a lot of great, webinars and things right now, and has written several books. Fix This Next is his brand new book, which I don't have a copy of yet. I think it's coming out in the next few weeks. But Mike Michalowicz wrote a book called Profit First. And he's an amazing guy. He's from the East Coast here in the US, New Jersey to be exact. And I'm excited to be a part of his team. I know that you are as well, Ronan. I know that he uses a concept. Some people are familiar with Mike Michalowicz. Some people are also familiar with Dave Ramsey. Dave Ramsey teaches a very similar concept for personal wealth or personal debt to income ratio, which is also very helpful. But Mike just takes this idea of profit first, and I love his line about let's eradicate entrepreneurial poverty. I think that profit first, implementing it into your business will make you permanently profitable, and will help you, be not in that that percentage of small businesses that fail, which is, as just way too high for those of us. So that's a little bit about what I feel like Profit First is. For us, it was a game changer and probably a business saver, especially right now. You know what I mean? We've been practicing it for 4 years, and it's definitely one of the best things I ever did for my business.
Why I love it, Mary, is so let me go back in history. So 30 years ago, I thought I wanted to be an accountant. Can you believe that?
Yes,
and I trained and I did my level 1 accountancy exams, and I went, you know what? I don't want to be an accountant. I want to be a marketeer. So I switched into marketing, but over the years, I've been in business. I've merged a business. So I know my way around P&L accounts and cash flows and balance sheets. In fact, I can debate them with most accountants. But it never made sense to me. The gap principles, the general accounting principles and procedures just never made sense to me, because, at the end, when your accountant used to present you the accounts and you see the profit at the end of it,
yes.
And you go, yeah, okay, I made that profit, but where's the cash?
Yes.
We've all been there, right?
Yes.
So that's why I love Profit First, because it's based on bank balance accounting. Will you tell us a little bit about bank balance accounting and why it works, and because that's how we operate as business people rather than as accountants?
Well, yes, and it's absolutely true. So, and I love that statement about the P&L, the statement from your accountant. Every year I would just scratch my head and go, where did that money go? And it's, if you're only going in there once a year, it's really hard to remember where all that money went. But, the idea of bank balance accounting was introduced to me probably 20 some years ago by one of my mentors, Ann Monteith. And she talked about this pre-profit first, pre all of this, but she said, most of us as small business owners, bank balance accounting. At that point, you would open up maybe your bank statement, maybe your computer, or you go online. Nowadays, it's just an app in our phone. And we go, I've got this much money, so that's how much money I have. And we just run our business according to that bank balance. And that's just so incredibly not a true number. Would you not agree? Like that number is irrelevant because it's not taking into consideration so many things. It's not taking into consideration the bills that haven't come in yet, much less you paying yourself or employees or taxes. Gosh forbid that you're going to put away a profit or anything like that. So Profit First is a system that runs, on the idea of not just opening that app and seeing how much money you have, but spreading that wealth or spreading that money out so that we have those 5 different accounts. And let's just talk about those real quick, if you don't mind. So
Sure.
for me, and Ronan, I don't know about you, but we do use that system. We have our income in account. We have our operating expense, our profit account, our owner's pay, and our tax account. So I do keep balances in all of those, and I make commitments to how I distribute my funds and dates and such. However, that's how we run our business now versus that one well that would collect all the water and all the funds and everything came out of the same place. Well, inevitably, I think what happens when we do that is that well runs dry well before we pay ourselves, or goodness forbid, we don't, make sure we keep 10% of that in there for profit to collect at the end of the quarter or year. And, overall bank balance accounting is not the right way unless you're doing it the Profit First way. But I'm sure you can add to that more eloquently since you're much further along in accounting than I am.
No. I don't think so. But I think, from talking to clients that we've had and even looking at ourselves and, that principle of Parkinson's law that we consume it if it's there, I tell photographers the story when I'm explaining Profit First that, looking at me, I love my cake. So I tell them the story of, when I go to friends and I'm always doing the latest fad diet, right, to try and lose some weight. So my best friend, Jerry, he's absolutely sick of it because every year I'm trying a new diet.
Right.
But his partner makes the most wonderful chocolate cake. And I was there recently a couple of months ago and Sandra brought out this beautiful chocolate cake, and I was going, I can't tell Jerry now that I can't have some of this, because if I tell him, he'll go, oh no, here's Ryle again, and he's gone one of these mad diets again. So do you know what I do? I'll cut a little slice and I'll just have a little bit. So I cut a little slice in it, so I'm going to leave it at that. And we get talking about the politics in the tennis club. And we've been playing doubles for 20 years together, so we get on really, really well. And there's always politics in a golf club or an association, as you know.
Yes.
So we're going through all the politics, and that guy did that, and she did that, and everything else. Anyway, 2 hours pass, and I look down, and the cake's gone, and I ate 3/4 of it. But if Sandra had only cut a little slice, I would have ate a little slice and been happy with it. But because the full cake was there, I consumed it, and that's human nature, right?
Of course.
If it's there, we consume it. And Profit First falls into that principle too. By dividing your money out into the different bank accounts, then you're not tempted. So
right. So, you're exactly right. It's like a pool. It's a pool of money, and you drain it until the money runs out. I mean, it's just human nature. It's not that we're bad people. It's really not. It's absolutely acceptable that that's how we do that. I mean, acceptable in the fact that if it's there, you're going to eat it. If it's there, I'm going to use it. It's just common sense to me. So that's why separating it out keeps us from rushing around in a panic to try to fill it back up. And that's what happens to so many of us. And maybe even some of us right now. Right now, if we weren't ready to weather this storm that we're in, and and since we're talking about financials, I'll say this, but if we're not ready, we're maybe in a little bit of a panic to fill that pool up, because it might be running out. So when we find ourselves in that position, that's when we start marketing or running a business from desperation instead of inspiration. So I think that's another piece that, bank balance accounting creates in us as small business owners.
Right. So a lot of people who are online, Mary, they probably they want solutions as to how do we survive this right now. So what can we start with? Yeah. And one of the principles that we all know that cash flow is oxygen in our business. So we need to hold on to that oxygen as best we can. And in Profit First, we have a principle of expenses assessment, right?
Right.
Do you want to talk a little bit about that as to how we would look at those and how we would treat them and break them up?
Well, I mean, about the instant assessment, or are you talking about?
No, I'm talking about the expenses assessment. So if I need to save money now,
You go ahead. Yeah.
So there's going to be expenses that we can cut now. There's going to be expenses that we can negotiate, and there's going to be expenses that we can't do anything with. We just got to park them for now.
Right.
So from wearing your profit first hat or your business experience, what you've done, what would you do right now? How would you go about that?
To evaluate my expenses.
Yes.
Okay, so I would start by listing them all of them. And I would list all of my operational costs, what it costs for me to be in business. Now, this is not the same as our cost of goods. So our cost of goods right now is going to be maybe very low and very different, because if you're not doing business, you're not creating any cost of good expense or cost to sales expense. But operational costs are things that happen on a monthly basis, whether you have one appointment or 200 appointments, right? So list them all out and label them as, you know, can't do anything about, like you said, or this could be on hold, or this is actually, why am I still paying this? This is something that I actually could do without. And I'll bring this up now. Something that Mike Michalowicz recommended the other day that I thought was really smart, really, really smart, and we did, is call your banks or credit card companies and cancel all your cards, or have them reissue all your cards. And just tell them, and this is personally and for your business. And I think this is a really smart thing to do, because a lot of us have little subscriptions or things that are recurring on our credit cards that we might not even be aware of. I mean, if we really sat down and examined our bank statements or our credit card statements like we should, we would. But I actually did it, and I had some old like apps and things that I didn't even know were still hitting my card. So list all your expenses and then look through your statements and see, don't just do it from memory what you think are all your expenses. Actually, you know, look through your credit card or bank statements and look at everything that's getting charged to your account on a monthly basis, because that's probably what your operational costs are. And do it for yourself personally, because I was surprised. I saved something like, I knocked like $40 or $50 off a month just from getting rid of some apps and different things that I didn't even realize I still had.
That you weren't using anyway.
Yeah.
And that's a great tip, because and it's important not to cancel, right? Because that can affect our credit rating, but to get them reissued.
Tell them what you're doing.
Yes.
And I think it's perfectly acceptable. Tell them, look, I feel like I've got a lot of things running to my card that I need. I don't even know how to stop them. Like maybe there's a recurring magazine subscription and you're like, I haven't read that magazine in a year. It ends up just going in the garbage. You know, like I have one of those and I can't figure out how to cancel it. So they're going to have to cancel it now. They'll have to reach out to me and I'll say, no, we don't want to renew. And this isn't being shady. This is not by any means am I saying to leave anybody on the hook for money you owe them. That's not what I mean. But we've mentioned this several times, even on these webinars. Maybe your Adobe membership, you could call and have them hold it for 90 days, or they will suspend it for 90 days, still let you have full access to Adobe, but they won't charge you for 90 days if you pick up the phone and call. So label your expenses as in, you know, that idea that I can cut it now, maybe I can negotiate that cost or expense, and, you know, the ones that are just necessary and I need. So there's 3 different ways you can label them: to cut it, to maybe call and negotiate, put it on hold, suspend it, or understand that this is an expense that I need to keep maybe you need to keep your internet service right now, but maybe you look at your cell phone, your cell phone expense and go, wow, I really don't need this extra line I put on for my iWatch 2 years ago and never used. Or there's a lot of little expenses that creep in that if you call these people, I think they'll work with you now more than ever. And you may be shocked at the amount of savings that could come from just evaluating those expenses.
Absolutely. And we were the same. And a lot of photographers I've done this with pre-crisis, they exactly the same thing. Mm-hmm. You know, we found up to $120, $30, $40 a month that was going out.
Yeah.
You know, that from just those simple things that you just forget about because they just get charged to the card and we keep going with it.
Oh yeah.
So Mike talked about negotiate. So if we look at a business, if I've got a high street studio, right, probably one of my biggest expenses outside employees is my rent, right? Mm-hmm. And Mike talked about this the other day about the principle of those who ask first have a chance of getting it, but if you leave it till second or third and the herd start asking, the answer is probably going to be no. So would you recommend that if you are in that scenario that you would make that call early to the landlord?
Oh my gosh, yes. Thank you for saying that. And he was exactly spot on. There's only so much, and even right now in the US, like there's the SBA.gov site, there's a lot of there's the crisis loans, slant grants. It's very unclear what's actually going to be forgiven and what's not, but there are availability. But there's only, and I say only, what is it? Only $35 billion available. And that sounds like, well, Mary, but do you know how many small businesses there are? And this doesn't even include your micro and gig businesses, which are also going to start, they're going to need assistance. And those are the ones that, because those loans and those grants are based on mostly payroll tax. That's not a thing for so many small contract businesses or solopreneurs, et cetera. So there's going to have to be another resolution for that. But yeah, the early adopters are the ones, because I think another example is, interest rates, right? They're low right now. Maybe you own your building. Well, if you're one of the first ones to get into your banker or your financial advisor and start talking about this, you're going to be some of the first to take advantage of it. At some point, it's going to get exhausted. It's just going to get exhausted. It's like if this were a natural disaster of weather. If this was like, Ralph Ramagera talked about Hurricane Katrina, was it last week, and how that shut down their businesses. Well, Red Cross comes in and FEMA comes in and all these people come in, but then those things become exhausted after a while. And there's still those late adopters coming in going, oh, well, by the way, I need that. And it's exhausted at that point. And there may not be any funds or time or energy left. So yes, early adopters and adopters are going to be the ones that definitely need to be a part of it. Another thing Mike brought up, and I thought was really, really brilliant, is if you do have, outside of your mortgage or rent, if you do have payroll and you do have employees, and that is one of the largest expense for many, many small businesses, not mine because I don't have employees, but, he talked about evaluating that. First of all, if if you only have 90 days cash reserves, do not exhaust those reserves and then lay off your employees. Do not do that. You're not doing your employees any favor. And this is why right now, more than ever, especially here in the US, and I can only speak for the US, but right now, there are more things for people who are unemployed to take advantage of than I don't know if we've ever seen in the United States. If you wait, exhaust your cash reserves, which means you're exhausting and probably killing your business, and then lay them off, there again, those resources might be gone. So do not do this to be this hero and save these people, because you're just throwing them. It's like trying to put out a house fire with a garden hose. It's not going to work. So, be conscientious. And by no means do I want to see people be laid off. And by no means do I want to see business owners have to lay off. But if you look at your cash reserves and realize that that's where you're at, you probably are better to act now than to exhaust all that money and then do it later.
Absolutely. You're not going to do them any favors by putting it off, especially yourself. Because I've talked to some business owners and they're talking about taking out a loan to keep on their employees, but then you're taking it all on yourself again as the business owner. And as the business owner, when you do need to take a loan out to invest in your business, to expand your business or whatever, if your credit rating is hurt, well, then you're not going to get that loan. No. So you're actually not doing yourself any favors, even though you might think you are, and you're certainly not doing your employees, because as you say, it's the same here. They've increased the benefits now for people who are losing their jobs. Yes. So just, you'll have to make the hard decision, make it, do it. It's difficult, but you're going to do yourself a favor and you're going to do your employees a favor.
Oh yeah, absolutely. And same thing with loans or, taking advantage of interest rates or what have you. I mean, all that stuff is going to be exhausted eventually. We just have to understand that they're pouring it from this, proverbial jug, and it's going to run out. It just has to run out. So, get in there now. Don't wait. Don't sit back and wait. Go ahead and start working with it. Contact your banker, contact your financial advisor, contact your accountant. Don't get your information on Facebook or social media. Like, literally go to someone who understands and knows your business and get solid advice, and then go from there,
and it's also good to talk to somebody like you, Mary, who's a profit first professional, or whoever your financial advisor is, because you're going to look in and you're going to take the emotion away. Because as business owners, yeah, we're emotionally attached to our business,
Oh,
right?
so yes.
And I know in the past, like I've had a business that failed in the last recession with 50 people in it. And oh my gosh, it's the most gut-wrenching, sad thing for everyone, you know, it really is. But we hadn't got cash reserves then to survive it. This time we do. We learned our lesson the last time. But you've got to take action early. I look back and I say, if I had taken action a little bit earlier, that maybe we could have survived that one as well, because we stuck with people and tried to help them through and things like that. So if I had an external advisor, they would have said, Ronan, take away that emotion, take your head out of the sand. You know, it's tough love, but they can talk to you that way because they don't have that emotional attachment.
100%. And I know it's hard. And, you know, a lot of us base, well, I know I do, so I'm just going to own it. I mean, you base your worth, you base your success, you base so much of it on the success of what you built. You know, our children, you know, if our children are successful, we feel successful. If our businesses are successful, we are successful. Those of us who are small creatives and create images, if our clients cry, we are successful. If we get a ribbon at the, you know, image competition, we're successful. We base it so much on that. And this is a time where you need to use the other side of your brain and definitely take the emotion out of it. And if you can't, hire someone or ask a friend. I know you and I are here. We're profit first professionals. We've been trained in this. I've been practicing this for 4 years. Profit first is why we will get through this. And it's why we will. And I know that. And ask somebody. We're here to help. And I know Mike's been giving lots of webinars. I think he has one tonight again at 8 p.m. U.S. Eastern Daylight Time. So there's a lot of resources out there, but people to help.
And you know, there's a question in from Doug, and Doug is asking, like, how do you get photographers to implement this concept if they don't have enough volume in their business to regularly move money to these accounts? You just do it from the start. You just have to do it.
Yeah.
So, you know, and the simple principle is, like, people be saying, well, I've no cash right now. It doesn't matter. Start now. Learn the principles. Open the bank accounts.
I will tell you what, I read the book. It's embarrassing how long it took me just to open those 5 accounts, because the principle of it is you open 2 of them at a completely separate bank. I do not have that app on my phone. I don't remember the password. Like, I have to look it up. It is very hard for me to access my tax and my profit account because I just put money in it 2 days a month. Right. And you know what? Start this way. And this is something we hear, and I know you hear this, Ronan. Well, when I get some more money, I'll start. Why? Why not start right now? For every dollar you make, put 1% into that profit account. And then you know what you have to pay in taxes. That's not a guessing game. And right now, yeah, there may be some waivers and it may be pushed off, but just like Mike mentioned in the webinar the other day, if they push this one tax payment till June, there's another one in July, folks, and they haven't mentioned that one yet. So just plan on your taxes. We all know we have to pay them. Another piece of advice is, if you are an event photographer, and I cannot say this enough because I feel like that is one industry that is hurting so bad right now, and I hear so much frustration, anger, and denial. You should have a 6th account, in my opinion. If you are prepaid or given a retainer or deposit on a job, do not touch that money until you have produced that job. Why? Because I don't care what kind of contract you have, you do not have a contract for coronavirus. And it's being proven all over the Commonwealth of Virginia right now. And these people do not have the money because why? They've spent it. And now people want their money back. And it's going to cause a lot of problems. And it's putting a stain on professional photographers in our local area already. So I'm being very preachy, and I apologize, but I get preachy when I start talking about my money. So
no, that's all right. And we understand that there'll be a lot of people online who maybe they haven't practiced profit first, so they're in a different situation than us. So we're not saying that we don't understand your pain. We do understand your pain. As I said, I lost a business in 2008. I understand exactly the challenges right now. But we have also outlined what you can do now. You know, you've got to protect that cash and that oxygen now. So by just looking at your expenses and cutting what you can, as Mary said, not just business wise, but do it personally. And there
Yes.
was a great tip there that Mike gave us, which was, get those cards reissued, both business wise and personally. And when you are getting them reissued, make sure that some banks, when they reissue the cards, they'll say, do you want to continue the subscriptions? Or they
Yes.
mightn't even ask you that, but automatically assume that that's what you want. So make sure you're very clear that you want the cards reissued and you want everything canceled.
Yeah, let me tell you a funny story about that, Ronan. I
Yeah.
have one client that I'm working with, and we're trying to get this going, and he's newly engaged, but when he had his cards reissued, he realized he still was paying two, not one, two dating app,
Right.
dating little subscriptions. It's just a couple bucks a month. He's like, his wife said, I don't think you need this anymore. He's like, no, I didn't even realize. But I mean, and that's kind of funny, and we got a chuckle out of it. But I mean, saving money, that's one way a lot of people are saving. Maybe it's $50, maybe it's a couple $100. You don't know, because I don't pay close enough attention to that. So anyway, just kind of funny story about that.
And the other thing it has done, Mary, it changes your mindset too.
Yes.
Because this, like I've been here, where I chase revenue, and say the profit will come, the profit will come, the profit will come. But guess what? It never comes. Why? Because my OPEX go in line with my revenue and the
Yes.
profit never drops to the bottom.
Always.
And Profit First changes your mindset to concentrate on your operational expenses, right?
Oh,
Have you
yes.
any stories you can tell just to show that change in mindset and how that works? Because this is not relevant for us now in the struggle that we're in now, but it's very relevant as we start to build business again, because we're going to get through this. We're going to rebuild our business. We're going to prosper again. But just even change that mindset from not chasing the revenue, but looking at your OPEX as how it's made up and what drives it.
Yeah, so the whole mindset, and it was slow. I'm not going to pretend for 1 minute that I read the book and just implemented it. It was a process. I told you guys it took me almost a year just to get the bank accounts opened, and we started with a small percentage of profit distribution, because I was scared. I was like, if I start putting away 10%, then how am I going to do this and that? And I was all this fixed mindset, right? All these fixed ideas in my brain of why it wasn't going to work. So I said, okay, I'm going to be open-minded. I'm going to try to have an open mindset and a growth mindset. So I'm going to try. So I just set 2 days a month, just 2 days. I do the 10th and 25th. It's up to you how you want to do it. Some people do other dates. That's fine. Maybe you do once a month. 2 dates where I just sat down and I looked at what I had in my income in account, and I just distributed it. I knew I wanted to put away at least 1% for profit. I knew what my taxes were going to be. So that was a no-brainer, what I needed to put away in the tax account. And then I know what I want to pay myself. So that was put away. And then I had my operating expenses, which I do write out my operating expenses probably twice a year. I write those out because things change and shift. For example, a couple of years ago, I added 3XM into my product line offerings. And so I needed to add that into what it costs for me to do business, because it's just a different, it's a different little bit of a different mindset, or a different shift in our collections or our portraits. And so twice a year we'll sit down and do that. But I just distributed what I needed to do. But the things that were non-negotiable for me at that point, and this is where I really had to stay true to what I wanted to accomplish, is this is what I had to put away to pay myself because I want to be paid for my job. This is what I needed to put away to have profit at the end. And I know what my taxes were. So everything else, that had to be negotiated. Meaning, if I look at the end of the month and I'm like, ooh, I don't have enough money in my operating account, then I need to look at my operating expenses on a regular basis and make cuts then, not and in December, April, whatever. That's too late, because what do? You immediately go to that profit account or your income salary account, and you pull from there. And that was a mindset that once I started regularly paying myself, and I loved getting that profit check every quarter, or holding it to the end of the year, that will change your mindset in a heartbeat. really and truly. If you can, it's like a diet, it's like an exercise routine, it's like meditation, it's like anything that you know you want to do. Take the lead from James Clear or BJ Fogg or any of these brilliant people that teach us about small changes. Do it in small increments. No one is saying read the book and just do it, because that's silly. We're not going to do that. That's too big. We can't eat all that. But that little piece of cake that you should have had, take little pieces of cake or take little bites. So that's my mindset is that, tiny changes, huge results, tiny, small changes.
And it helps to drive innovation. I have a client, and when we did her assessment, her OPEX
Yeah.
were completely out of kilter where they
Oh,
needed to
yeah.
be. And she started to look at what she does. And one of the things she did was just to explain how it changes your mindset is we were looking at one of the trade shows she does. So she comes to this trade show every single year and she sets up her booth. And it's on a Saturday and a Sunday. So she used to bring 2 employees that she had to pay on the Saturday and Sunday. So she decided, you know what, the cost per lead's too great. So she said, I'm going to cancel it. So she rang the organizer, said, I'm canceling. I know I've done it for 10 years, but I'm canceling. And they turned around to her, rang her back the next day and says, I tell you what we'll do. We'll have the price of the booth. So she looked then and she did it again. She went, no, it's still too expensive. I'm not going to do it. And she says, well, can you give me 24 hours? So she put down the phone. She thought about it overnight. She came back the next day and she said, right, I'm going to do it. But she decided she was going to do it with 2 less employees. And so she wouldn't have to pay the employees for the 2 days. She wouldn't have to provide them food and drink. And she's really organized. So she actually captures her leads and counts them and everything else. She captured 1 less lead at a fraction of the total cost.
Right.
But she said only for that mindset of focusing on not chasing the sale,
Yes.
but thinking about the OPEX that are the operation expense she has to create that sale, that she never would have thought of doing that.
100%.
And it does change your mindset.
Oh, 100%. And I hear this a lot too. People say, well, maybe if your volume, I lost a school or a sports team, or if you photograph a lot of weddings, I didn't do as many weddings. But if you really break it down, because maybe that shift happened because you changed prices or policies or different things that were going to make you more profitable. And then you're like, oh, well, I lost a school. But when you look at it, you break it down, you're like, wait a minute. I lost one school that cost me this, 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 and this, because it's time, employees, all these things, but I only made 3% less. Or I did 5 less weddings, but I did this many more portrait sessions and I'm up for the year. Like, you really do need to not just hyper focus on one thing. You need to look at all of your product lines and you need to break each of them down independently, because the cost that involves in photographing a school versus a family portrait versus a wedding versus, all the product lines that we all do, seniors even, your marketing and your time and everything with the high school senior may be very different than what you spend with a family. Or a newborn session is very different for me than just a child's portrait session, So I have to break those down in increments of time and energy and marketing and all that to understand how much that lead actually costs. So your client was brilliant in figuring that out, because now she's still getting those leads and saved probably quite a bit, not just on the booth rental, but on the employee costs.
Yes.
And the exhaustion of your employees. Now you've had your employees work all weekend. Now you're back to Monday, back in the studio. So there's a lot of reasons why, we have to evaluate those things. If you're not constantly evaluating your costs in your products and your offerings, then you don't have a handle. Like, I know for me that anything over a 20% cost is just off the table for me. I cannot be profitable for what type of business I run. I prefer to be under 10%, quite frankly. Some things creep up a little bit here or there, but I'm constantly refiguring. Because why? Because shipping charges change. When the gas prices went up several years ago, I had to refigure all my pricing, because all of a sudden a frame that used to cost me X was now costing Y because of the gas surcharge. Well, it's only $7. It adds up. $7 times. Now I'm realizing, there goes my paycheck, or there goes my profit. So we have to be, I know it's fun to just be creative. And if you're lucky enough to just hire somebody to handle all this stuff for you, great. I don't have that luxury. So it's my job as a small business owner to be on touch with all of these. And bottom line, profit first has just kept me more organized and makes it simple for me, as someone who tries to straddle both sides of that brain. So, tries to.
So there was a question I was asked today, and somebody asked me, so we've already talked about taking on new debt, and you need to avoid taking on new debt.
Yes.
But you know, when you have a credit card and you get a bill and you're used to paying it off in full, should you continue to do that, or pay the minimal amount to hold on to cash right now? Or there's pluses and minuses, right? I know what Mike's opinion is, but what's your opinion?
Yeah, well, my opinion is this: if you, I personally try not to carry credit card debt because I just, from somebody from newly married who, when Daryl and I got married, that was credit cards we did not understand, and we learned the hard way. Jamie Hayes, my business partner, will say that's how we opened the studio. Not a good way to open the studio. So we've learned all that the hard way. You know, if you have a credit card situation that you have a very high interest rate or high fees or something, maybe you need to look at that. However, if you can maintain it and ride this out, I believe cash is king right now. And if you can hold on to your cash reserves or have those cash reserves so that you can continue to make minimum payments, you can continue to pay, your vendors or your operating expenses, and also, continue to maybe keep some employees or not, just depending on your situation. Everybody's situation is different. I'm a big believer in hanging onto that cash. So that's my personal belief. Unless you are like loan shark rates and this is going to kill you, but I still think I would wait until I got out of this. And then that would probably be one of the first things I'd pay off. However, Dave Ramsey would say, pick those smaller little ones, pay the little ones off first, let that big monster just pay the minimum for now, pay off the little itty bitties, then just focus in on just that one big monster. And I kind of like his philosophy on that as well, because when you only have that one, it's easier to really go full force with it. But if you have that one plus this and this and this little one and this little line, get all those little ones that are a lower interest rate paid off first, and then focus on the big monster.
And I know in our first financial one, somebody asked a question. So if I have a cash hoard, if I've managed to save cash, should I clear debt now with it? So the answer to that is no right now, right? Hold on to the cash, because cash is king.
Yeah.
Yeah. Okay. So
I believe that.
We're all on
that's
the same
my belief.
page.
Yeah. And we all, your first reaction may be, well, I've got all this money and I think I'll just pay off my debt. Then, well, not really, because you're still going to have a light bill and a tax bill and a phone bill, and you don't know how long this is going to be, and you don't know when business is going to be back to usual. So hang on to that so you can maintain, right? Maintain is the word right now for me. Just maintain what I have. Don't add any new. Just maintain, and then, move forward. The only thing I would invest in right now, and I probably will, is I, had some virtual tours of my studio with some outside people, business owners I respect. I'm probably going to invest in some new studio samples just to freshen up. So when we're back up and running, that I have some new samples on the wall. But thank goodness labs and vendors are being super duper cool. And there's going to be some nice, refreshing discounts and different incentives. So I'll negotiate that deal the best I can. And that's probably the only money that I will spend right now until we're out of this.
Right. And we touched on this earlier about the tax thing. And I think Mike was pretty clear about this. He's saying, don't spend the tax bill. It's a deferral. You still owe it. They're not going to cancel your tax bill.
No.
So if you can, put that money aside into a separate bank account to make sure you don't go near it.
Yes.
Because if you don't pay your tax bill, they are not very nice people as to what happens. So it's a deferral. It's not a cancellation, because a lot of people think it's a cancellation. It's not.
Good point. Yeah. Put it away. I mean, you don't have to send it. Hold it, put it, if you have anything remotely interest bearing, or you have anything you can do with it, but accrue that away and tag it that you can't touch that, because that's not your money. Whether we're talking about sales tax, income tax, personal, whatever tax we're talking about, it's not your money. Trust me, as someone who's been audited dozens of times, it is not your money, and they will get their money plus. So just put it away and, hold it if you want. But if they're deferring till June, that July payment is still going to be due. So,
Absolutely. Oh, and Fran has just said he canceled 6 subscriptions he had on PayPal. They were all ranging between $20 and $70. Wow. So like
Wow.
that's an example. So that's probably a monthly charge, Fran. So you've saved anywhere between $120 and $420 a month. That's massive money, you
That's
know?
massive. And a lot of times we get kind of suckered into needing more Dropbox storage, Apple storage, whatever, and they charge more. And you think, oh, okay. Well, all of a sudden, if you evaluate, we have time, right? If you evaluate, wait a minute, they've talked me into this Dropbox charge a month, and I'm not picking on any one company, but I'm only using this much. Obviously, I don't need this subscription. I need this subscription. So, $10, $20 a month is what those are. You might save because you just take your subscription down to a smaller, capacity or a smaller level.
And one of the things we're looking at is we use Dropbox in our business, and we get charged yearly for it. It's
Yeah.
about $2,400 we spend on it,
Hmm.
and but we also use Microsoft Office 365, and OneDrive is included in there.
Yeah.
So we're actually paying a provider for a service, but we're paying someone else for a similar service. So
Hmm.
our IT team at the moment is working out a plan to switch that all over to OneDrive and drop
Yeah. Yeah.
Dropbox. Not to
Well,
pick
that's
on
good.
Dropbox, but it
Google
was
has
just,
drive options. A lot of us, Google is the solution, and a lot of times it's free. And another thing is you have a recurring. A lot of us do online lookbooks or magazines. Well, I realized I had three different subscriptions because I'd used one and then another, and I'm like, I don't need all these, and these are outdated. So canceling those. I mean, I probably between both studios and personally have saved over $1,000 just by canceling subscriptions that me, my husband, the kids, Jamie, the studios just didn't even realize we had, which is
yeah,
shame on me,
yeah.
shame on me.
I've been there as well. We're
Yeah.
literally going through our expense account at the moment, line by line by
Uh-huh.
line, and saying, can we justify it? Not once. Can we justify it twice? Can we justify it three times? If we can't, it's gone.
Yes.
And we
No,
have to,
absolutely. We do have to.
because the economists are telling us, we got to keep spending to keep the economy going. And I understand all that, but we got to look after us right now, and it's
Hmm.
going to be the survival of the fittest and the cleverest and the
Hmm.
people who take this action now to get through this.
Agree. Agree.
So is there any more questions? So I have Jen on, and she's saying she set up a Fidelity SEPP account. I don't know what that is being in this part of the pond, but $400 a month direct deposit over the last few years. It's already up to 32K. She never
Wow.
missed it because I never see it and don't rely on it. I have
It's a
never
SEP
gone.
account. Yeah, that's like a way to
So
save. It's a forced kind of savings or, that type of thing. So that's super, super smart. Doug had asked, what do you recommend photographers and the 1%? I use that. Mike uses that. Did you guys start with, or did you just pull the Band-Aid off and start with 10, or did you start smaller and build
no,
up to that?
we started smaller and built
Mhm.
up because I wanted, just like that, I wanted to. What it gives you is, and Mary talked about the 10th and the 25th of the month, what that gives you is if you send the money into the various accounts on the same days each month, it gives you a feel for how cash flows through your business.
Yes.
So like I was used to just studying P&L accounts, and I would
Hmm.
say, the last 3 months of the year, we make most of our profit,
Yes.
which is the case.
Hmm.
However, that's not when the cash flows through our business. It actually eats up more cash because in part of our business, we're dealing with very large companies and we give credit.
Yes.
So actually our requirement for cash is greater then because we're paying our people to manufacture the goods that we're not going to get paid for 30,
Hmm.
60, 90 days.
Right.
So doing that, it gives you a feel for how the cash actually flows through the business. So when our sales are lower in the first quarter, we actually create more cash.
Right. And
Because
ours is the opposite. So
right.
first of all, something that I think is important to say is cash flow goes both ways. So when we look at our accounts, a lot of people think, I'm looking at my cash flow. Okay, but are you looking at it going out? What we do quite a lot is look at how it and when it's coming in. Well, it also is going to go out. So for us, all of a sudden last quarter, we're getting a lot of businesses, or if you're a volume business, maybe it's fall and spring, whatever it is, you're getting all this cash, and you like all of a sudden you're buying holiday gifts, and you're planning you're planning a getaway for the whatever, and you've got all this money, right? Because we're bank account balancing, so we have all this money. You know what we forget? January, all those vendors want to be paid because it maybe is 30 days or so. So now it's like, uh-oh, what happened. So that's why if you sit down twice a month, and it's very important for me, and I'm very regimented about it, because I understand, and I now have 4 years of data. And I'm telling you, very rarely is it so far off. And the good news is because I have this data. If I look at this June from last June, there's going to be a difference, right? There's going to be a difference. But it's good for me to be able to mark that and understand the difference and the exception or why, than not to understand, So if you always do this great spring promotion, which maybe you're not doing this year, that's going to show up in your data, and it's good for you to understand that. Why? Because now you need to really kick up that summer promotion or that fall promotion that maybe you kind of, you know, tapered off on because that business became organically, but now we have to double up and make up for what we missed in those other quarters. And something else Mike said that I thought was really smart was to set up that separate COVID account.
Yes.
And for anybody that might be claiming loss of business, loss, anything like that, you need to track all of the expenses, additional hours, amount of work, training, anything that you're doing right now that's affected by that. You should be tracking in some sort of a capacity, not just receipts for money that you're spending because of this, but time and energy. So think about that. Set something up on your desktop or set something up in your management system where you are tracking this loss of a school, loss of a wedding, loss of business, refund, anything that you're doing, track that, because you don't know. I'd love to think we all remember, but I know I won't. So you might need to go back to that later this year to be able to claim or to adjust a claim or to make a claim for loss or costs during this crisis.
That's a great piece of advice. So Mary, before we finish, let's just talk about, there's some people in here who may be Profit First people practicing already, and then there's people in here who are new to Profit First. So I think what we're saying to them is that the first thing is that cash is your oxygen, cash is king. So in this scenario, you've got to cut your outgoings as quick as you can. So analyze them and decide what you can cut and make those cuts.
100%.
And then the second thing we're saying is buy Mike's book,
Yeah.
Read it, because we've got the gift of time now, as Damien Michalowicz said. So read the book, understand some of the principles, start small. You get that first bank account, which is your profit account. And the first thing to do is just allocate 1% of that, right?
I agree.
Receipts.
I think to remember, profit is not an event. So those of us that do this, because I did it, when I get some profit, I'll start profit first. Profit is not an event. Profit is not what happens at the end of the year or in a different part of the year. It's not part of your 5-year plan. Profit needs to do what you do today. Do not wait until tomorrow or this fairy tale next time. Profit is not an event. And I think that's one mind shift and mindset that we really need to adapt, because profit must happen now and profit must happen always. For every dollar we make, there needs to be a percentage, however small that is, that's profit. Because, profit needs to be baked into every single business, every single transaction, everything that we do. It needs to not be an event. Profit needs to become a habit. And it is now for me. What did they say? It takes 21 times or 21 different times or something like that to make something a habit. BJ Fogg talks about it, as I mentioned, small changes. Start making these small changes and make profit a habit in your business and in your life, because like what happens with habits, it'll just become natural. It's perfectly natural and normal for me now to sit down those 2 days and distribute those funds. But I had to make the decision one time. But once I made that decision, I just wrote it in my calendar. So I know on these days I do this job. It's part of my job. And it's now a habit for me. And I hope it'll become a habit for a lot of y'all.
Doug has asked a question. Can you go over the 5 accounts again? Do we want to go into that detail now, or do you think that people need to sort of let's talk about it.
I can just say the 5 accounts again.
Sure.
I mean, so the 5 accounts, are your income in. That's the money that comes in. It goes into that account. On the 10th and the 25th, I distribute to 4 different accounts. I distribute to my operating expense account, my profit account, my owner's pay account, and my tax account. I do photograph weddings, so I have a what I call an event account, and that's where I put any prepaid money or retainer money or anything for an event that I've not yet produced, meaning I've not photographed it yet and I'm not delivered their finished product. So I actually have 6, but that's because I do events. So those are the accounts. Look up Mike's book, or there's resources online, Ronan, right? If you just Google Mike Michalowicz Profit First, there's really great graphs and charts, and they can explain it way better than me. But that'll go over those 5 accounts. So if you do nothing else in the next couple of days, open the accounts. You
Yes.
can open them online. Just open the accounts.
Is there a particular bank, Mary, that you would recommend? I know some people say that sometimes the regional banks are better to open up the accounts for you. I know in the UK, we've a lot of photographers who've done this, and they found Santander were the best bank, that they were the most reasonable, and they were able to do it with not that much extra fees to do that.
Yeah, so I did
So,
not incur any extra fees. So shop around. A lot of times your smaller banks, my profit and tax accounts are at a very small local bank. I know the banker. My husband and I deal with him personally. I have those set up there. I get no charges. There was a minimum, and there's a minimum you have to keep in the account, which is very low. I think it's like $500 or $1,000. It's not very high, and I have no fees and charges. My other accounts are in the bank I use. It's a regional bank, but I don't have any fees or charges at that bank either. I've banked with them for 20 years. Well, I don't know what name they were 20 years ago, but the same bank. And that's where I have my other accounts. So I do recommend shopping around. There's some online options for banks now. If you're going to have automatic withdrawals, there's some really great options. My husband uses those for our real estate company. So shop around when you have time, right? This gift of time we keep mentioning. Shop around and look for those banks that give you those options and best practices. So they're available. They're out there.
and something we didn't talk about, which was we did talk about the owner's pay account, but one of the principles of the owner's pay account is often as business owners, we're the ones who do it out. And I think Mike gives the example, he asks to every audience. So if you're ever in his audience, he'll ask, you as business owners, who's the most important person in your business? And he says invariably somebody says it's the marketing person, or it's the accountant, or it's someone else other than the business owner. But there's nobody more important than you as the owner. So the principle of the owner's pay account is to make sure that your money is always in your owner's account to pay you. Your business should pay you what you're due, and that is your owner's pay net of your tax. Correct?
Yes, correct.
And then in your taxation account, your money is in there to pay your tax bill at the end of the year. So those who operate profit first do something rather different than a lot of other people. When they get their tax bill, the higher it is, they go, yes, because it means they've made more money.
Yes, you're exactly right.
So
Nancy said, talk about Ronan's book, please.
Ronan's book, my book.
Do you have a book that I didn't know about?
No, I don't have a book. It's on my to-do list, and it has been now for a year.
I've heard about this book, but I haven't seen it yet.
Jamie's even taken the picture for the front cover. But no, I don't have a book yet. It is on my list to do, and I thought with this gift of time that I would get to do it. But Think Tank has just taken up. I'm now working longer.
You must never
hours
sleep.
You're
always available. I'm like, why are you up? And you're like, why are you up? And I'm like, I don't know. I get circles under my eyes. This is a fun conversation. Maybe we'll have another one down the road and really deep dive into.
We'll deep dive a little bit further. Yes.
But I think that you're right. The owner's salary gets left out so much, and what happens is we pay our vendors, we pay maybe our employees, we pay our overhead. And then we go, oh, well, maybe next time, because there's no money left. Well, I promise you guys, if you make profit first a habit and you do this, it's there because you have forced it into these places. And guys, don't you find like when you force things into, if you've ever had when I was little, we had a Christmas account where we'd save money for Christmas, or you wanted to go on a trip for 2 years, we saved because we wanted to take this big trip to Hawaii. So our family, we had a travel account. You start, and at first it's like, ooh, okay. But then it just becomes natural, and we forgot about it. And when it came time to go on our trip, we were like, oh my goodness, we actually have the money to take this trip and have no debt. So it's the same thing, as a sole proprietor. What are you saying, Celia? Yes, as a sole proprietor, what's the owner pay? Well, you decide that. I mean, you decide what your owner's pay is. Maybe you want to make $500 a week. Maybe you've decided it's X number of dollars a year. I have a flat owner's pay that I pay myself as one of the owners of my company. It's a flat fee that I get paid. It goes into that account and I get money twice a month, just like any other employee. So that's decided by you. And it could be as little as 200, 500, it could be $5,000 a week, depending what kind of business you have. But set a number and set it aside. And over time, that number will grow or not. And there again, that's something you need to talk to your financial advisor about, because some people like to take a lower salary and then take bigger profit gains at the end. That's completely up to you and your financial advisors.
I have a great tool that can help with that. So
Yes, you do.
I have a calculator that I'll share a link after this. So if you join Photography Think Tank, if you're not already in there, and I will share a tool with you where we start with what you want your owner's pay to be, and we work backwards based on best practice percentages of profit first for various accounts. And it'll even bring you to say, how many shoots do you want to do that result in a sale? And it'll calculate all those numbers out for you automatically. So that's something we can talk about again at a future profit first
And that's so
event
good
maybe.
for our goal setting in our business, because
Yes.
that's how we used to do it on paper.
Yes.
But you would say, this is what I want to make, and this is what I need to do, and this is what my average needs to be. And we all should have that
Yes.
data that we look at every day.
But it's not our intention to get into that today, because what we really
Nope.
want to do is, we're all struggling now. We're in survival mode. So we've got to save that cash. So we wanted to share with you, what can you do today to save that oxygen, save that cash, so that we can all come through this crisis together.
List your expenses, define them, and decide what you either negotiate, keep, or get rid of, and open those bank accounts and just commit to 1%. Commit to making this a habit. You can do that today. It doesn't cost a penny. And I promise you, when we all come through this, you'll be a lot happier that you tick this off your list.
Absolutely. Because when you get busy again, you're not going to have time. You're going to put it off like everything else. So
Exactly
do it
right.
now, guys. Mary, thank you so much. Before you go, Mary, you're on again with the sales and marketing team on Thursday.
I'm so excited. Yes.
Do you just want to tell us a little bit, just gives us a flavor as to what you're going to be talking about?
Thursday, 1 p.m. Eastern Daylight Savings Time. So you guys have to do the math on what that means for you. But myself, Allison Tyler Jones, Marnie Claggett, Kira Daraberry, Catherine Lingsford, Damian McKillicuddy, Steve Soprato, and maybe Brian Muir. I'm not sure, maybe Jonathan Ryle. We are going to just talk about what we're working on right now that we know we're going to be ready to implement when we get out of this. So we're not going to talk about, we all know all the things we should be doing, being positive and community building, but things and projects, marketing projects or sales projects we're working on right now that we can implement when we're ready to get back to work. So that's what we're going to talk about Thursday.
Great. Thank you so much again, Mary, for your time. Really appreciate you.
Thank
Love
you.
spending time with you. I could talk to you all night here online, but
I could. You're the best.
My stomach is going. It's 7 p.m. here now, and it's saying, Ronan, it's dinner time. So,
get home to your beautiful family. Love you guys. Thank you for everything.
Take care, Mary. Thank you so much. Talk to you
all
soon.
Right.
Bye-bye, everybody. Good night.